books.
By the way, I want to compliment Governor Cuomo. He appointed the best-looking supervisor, the bank supervisor that I've encountered in any of the states.
Thank you, Mr. Chairman. Mr. Chairman, members of the committee, I'm Jill Considine, Superintendent of Banks of New York State and Chairman of the Conference of State Bank Supervisors, on whose behalf I am testifying today. Like the Four Horsemen of Notre Dame, we are truly the backfield of the nation's banking system. Like the Four Horsemen of Notre Dame, we are truly the backfield of the nation's banking system.
If we don't have confidence in the regulators to know what they're doing and have confidence in that they know what their responsibilities are, then I tell you, the banking business is in for a sad, sad turn of events.
Committee, I think if we had to arrive at one major conclusion, the problem started and continued and was magnified by the lack of regulatory audit involvement, both at the state, Constantine, and at the federal level. That with the regulatory process that we have had in place, the FDIC audit, the OCC audit, case of the state, the bank examiners of the state, the outside private house audits of the various institutions, let alone the Federal Reserve involvement when it's necessary or as a part of the day-to-day activities, and certainly, last but not least, the Internal Revenue Service itself, and yet we seem to not be able to find this bad apple in the barrel before it begins to rot the rest of the barrels.
I might say that an implication of all of this is where there will be growth in banking. The weaker the standards for the weak institutions, and in America today those are the larger institutions, the more we're going to be propelling interstate banking and the consolidation of capital assets, and the more we as a Congress are going to be faced with larger and larger banks who regulators have come to tell us are too big to fail. These new capital standards are an invitation for another taxpayer bailout of the financial industry, an invitation which we in Congress should respectfully decline. The risk-based capital standards were promulgated by the Basel Committee in order to provide a level playing field for an international banking system which is weakened by non-performing foreign loans and which has dangerous exposure in off-balance assets. The standards were looked at as a way to strengthen international banks. Instead, U.S. regulators appear to be using these standards to weaken the capital standards for all banks, especially strongly capitalized small and medium-sized ones. Yet, for whatever reason, the Basel Accords don't bring this into play. Another aspect of the risk-weighting capital standards is the treatment of home mortgages. Federal regulators under the Basel Accords will only require half the capital for home loans. If there's a lesson for the S&L scandal, it is that one does not sacrifice safety and soundness for social engineering. My own sense is the time for weakling regulatory oversight is over. The taxpayer should not be asked to dip again into the till for another multi-billion-dollar or multi-hundred-billion-dollar relief package based on industry excesses sanctioned by regulatory undersight. Accordingly, I would hope that regulators in panel today can tell us why they appear to be opting for loose capital standards when recent history would demonstrate a need for the reverse. If regulators consider some institutions too big to fail, they certainly shouldn't consider them too big to regulate.
No better, and you're a creature of Congress, and I'm going to look into what you do with your salaries and perks and so on, because I thought what you did was just absolutely ridiculous. And this sort of, you're sort of above everyone else. Well, I got to tell you, I think the American people want to know more about the Federal Reserve. I truly do.
Well, that's certainly, you're right, Congresswoman. It's the American public's right to know these matters. We've never tried to hide anything. We'd be happy to share that with anyone. Matter of fact, I feel quite confident.
Would you put for the record your salaries of each and every employee in terms of categories for this committee?
Well, not by name. No, that's confidential.
No, not by name. No, just the the classification or however you. Would you do that for the record?
We have constantly done that and been happy to share that with representatives.
No, I want it for the record. Would you put it in the record?
Well, as long as it doesn't violate our confidentiality.
Well, let me tell you, then I guess maybe we'll have to ask for a GAO report on that. Is that what you want me to do?
GAO is certainly entitled to look at this.
Brief overview of who we're speaking to here. This is the individual that used to be the senior counselor at the World Bank, 20-odd years in at the World Bank. But I'm not going to say any more. I want her to tell you all about her background. Go ahead, Ms. Hughes.
Well, I'm called the World Bank whistleblower, but there's actually a whole team of us. And I'll cut right to the end of where the problem is.
Okay.
Because it's been kind of like going up in an elevator. You think you've solved the problem, and then it turns out there's corruption behind that corruption.
Behind the veil, per se.
Yeah, it's like peeling an onion to get to the inside to see where all this corruption is coming from.
And where did you find the paper trail led to?
Well, it's also the money trail. You know how they say follow the money?
The money trail, that's right.
Yes. So there's the best university in Europe is called the Federal Institute of Technology.
It's
in Zurich, Switzerland.
That's correct, okay.
Yeah, and there are 3 mathematicians who took accurate data on who owns the world's companies. There's 43,000 of the transnational corporations who have shares traded on the capital markets.
Right.
And they found out that there was a secret super entity, mostly bankers. So you've got Goldman Sachs, you've got Citibank, you've got Bank of America, you've got, Deutsche Bank. But it turns out that these banks are actually all one bank.
Wow.
Yeah? And they're the group that owns the U.S. Federal Reserve System. And they also have seized control of 60% of the annual earnings on the capital markets and 40% of the value of these companies. But they didn't do it by investing a lot of money. It's a lot of money, but they have 10 times more the power that you would actually expect them to have. And they did this very cleverly by having the same directors go from one of these companies to another. And to answer your first question, they also control all of the media. They control the television programs, they control the press, they control the movies. And so you're being brainwashed every single day of your life. And when you're trying to find explanations for what's going on, the first thing you need to do is to disregard what's ever on the news or written on the headlines, because that's just to trick you and to keep you ignorant. I can give you another analogy, and it's a very good analogy. Think of The Wizard of Oz. It was written by, I forget his first name, Baum.
Right.
He was writing something to educate people about what they needed to do for their money system. And so the Yellow Brick Road,
The economy.
that's gold.
Mm-hmm.
Yeah? And the Wizard of Oz is those groups I was telling you about that control the capital markets. Mm-hmm. They are the screen that the Wizard of Oz had.
Right.
That's what your media is telling you. And the dog Toto that pulls the curtain aside, that's me and the rest of the World Bank whistleblowers. And the world is now looking to see what the Wizard of Oz has in store for them. You have to also recognize what happened to the presidents that didn't want this Federal Reserve System to go forward. Let me explain how it works, okay? If you have the Treasury Department that's issuing the currency, then you don't have to pay interest on it. But if you have the Treasury Department issue a promissory note to the Federal Reserve, and the Federal Reserve then issues the currency, then this note that the Treasury Department issued, there's interest on it. And that's how the debt every year gets bigger and bigger, because we're going to be spending more money than we're taking in. And let me tell you how the tax payments work.
Okay.
This I couldn't believe in the beginning, but it's absolutely true. When you fill out your taxes and you send a check one place and you send the tax form another place, the check that you send goes directly to the Federal Reserve, and they take that check and they send it to the United Kingdom, and the UK keeps, not the government, the UK banksters keep 40%, and then they send 60% on to the Jesuits in the Vatican. That's what's happening to our tax dollars.
Wow.
Now, how are we financing our government? We're selling drugs. We're selling the drugs that we grow in Afghanistan. We never had any poppies there until the war in Afghanistan. You think with all the satellites flying over, they couldn't see where the poppy fields are? No, that's how we earn our money.
Wow.
How does that grab you? Is that a good arrangement?
Wow.
No, it's not a good arrangement.
I just have to say this once again for everybody that's watching. This is Karen Hughes, the former senior counselor for the World Bank, 20 years in the World Bank. She's not some raving lunatic. This is a well-educated individual at the Ivy League school, Yale. I think we need to listen. You're saying 60% of our tax dollars get cut to the Vatican and the Jesuits. And I think for a lot of people out there, that's a pretty astounding, revelation, because, you think of the Jesuits. We have Pope Francis now, whom our president praises, and he's the very first Jesuit pope. And some people, when they think of the Jesuits, they think of an order of meek and humble men and all of these things. Why would the Vatican and the Jesuits be, caught up in such a stink like this? What in your perception, and what is their worldview? Are they a bunch of megalomaniacs? Are they just trying to amass a stupendous amount of wealth? What do you perceive in this whole situation for the Jesuits in the Vatican?
I'm so sorry to have to tell you. First of all, let me start out by saying that this has absolutely nothing whatsoever to do with the Catholic faith. Mm-hmm. This has absolutely nothing whatsoever to do with the people of faith that are not aware of this.
That's right.
And I have to tell you that there are, unfortunately, people who will mock the faith, and they will put on the priest's garb just so that they can hide their crimes. These are criminals. These are not Catholics. Wow. And unfortunately, there are many of them at the very top. It's rot at the top. Wow. And that's the way it is, and it's been documented. And I've been working with people who have documented this. It's been going on for a very, very long time. You can read what our founding fathers had to say about the Jesuits. After Lincoln was assassinated, the Jesuits were not allowed certain things, certain privileges in the United States. And that ban on the Jesuits was lifted by Ronald Reagan.
Ms. Considine, I wanted to ask you, Butterfield Fulcrum, it's a hedge fund management industry. Who are your major clients?
Mainly hedge funds,
Such as?
Very small ones. They wouldn't be on your radar screen.
Can you provide those for the record, please? Just pick one. Pick two. Pick three.
Yeah.
You must know who your clients are.
Yeah, yes, I am. The thing is, we are a private company, and we usually don't come out with our clients' names, so I would just have to check with it. The other thing is, it is not a U.S. company, so I would just like to go and get clearance on that.
Butterfield Fulcrum?
Butterfield Fulcrum.
It is based in what country, then?
It's a Bermuda company. It was founded 20 years ago in Bermuda. It was bought out about 2 years ago by a UK company. And then in the past year, we merged with the arm of Butterfield Bank, which is a 150-year-old Bermuda bank. So it's a global company. It is incorporated in Bermuda. Its senior management is located in the UK.
All right. I thank you for staying here, Mr. Chairman. My time is expired.
We have a vote on, so we have 3 votes on, so I hope we'll be able to make it. But let me just say that.
Mr. Chairman, may I just say, as I've listened today, I get more and more concerned when I represent a part of our country that is being devastated by what these New York institutions and New York headquarters institutions have done to America and have done to places like I represent. You have no conceivable idea of the damage you have done and are doing. I could go into a lot of detail here, and I know Mr. Chairman will have follow-up hearings. The way this whole thing is structured, it's an inside deal from the beginning. Every single witness we've had is headquartered in one place. You all know one another, you work together all the time, and I'll tell you, what you've done to Middle America is a sacrilege.
Chairman Towns, Ranking Member Issa, and other distinguished members of the committee, I want to thank you for the opportunity to testify today. My name is J.W. Verrett. I'm an assistant professor of law at George Mason Law School, and also a senior scholar at the Mercatus Center Financial Markets Working Group. I also serve as the lead investigator for the Corporate Federalism Initiative, a network of scholars dedicated to studying the intersection of state and federal authority in corporate governance. My focus today will be the trust document set up by the New York Federal Reserve Bank to manage the U.S. taxpayers' investment in AIG. Make no mistake, this document represents a grave risk to the American taxpayers $180 billion investment in AIG. I'm also concerned by the AIG Trust because of the precedent it sets. Secretary Geithner has announced his intention to create another trust to manage the Treasury's investment in Citigroup, as well as other TARP participants. If the AIG Trust, crafted during the Secretary's tenure as president of the New York Fed, is used as a model for these new entities, the risk to taxpayers will be multiplied many times over. The three most troubling provisions of the AIG Trust. One requires the trustees to manage the trust in the best interest of the Treasury rather than the U.S. taxpayer specifically. Of what Treasury means in this document, unfortunately, it's particularly unclear. Treasury Department is a defined term, which in corporate legal drafting is something we do to make sure that every time we use a term in a document, the definition is consistent. So we put it in bold, we put it in parentheses, we highlight it as much as possible. So Treasury Department is defined as the U.S. Department of the Treasury. Treasury, though, as mentioned in the applicable standard of care section, is not a defined term. It's not in bold and is very vague about its definition. Now, I think it is perfectly consistent to understand that might mean the Treasury Department. That might also mean Treasury, as in the general fund, in which case it still doesn't necessarily mean the same thing as maximizing shareholder value. Anything that might be good for the general fund, for Treasury's expenses, maybe they want to do something discretionary, but they can get AIG to fund it instead and as a subsidy on AIG's books, could be in the best interest of the Treasury and the general fund, but not in the best interest of maximizing the taxpayers' investment. Secondly, with respect to the corporate opportunity provision, I would offer only quickly that it would permit them to take opportunities that would otherwise belong to AIG. It's crafted specifically that way. And thirdly, just with respect to indemnification, as a former clerk for the Delaware Court of Chancery, I can offer my professional opinion with respect to Delaware law that this indemnification in here is not legal under Delaware law. It's not permitted by the Delaware General Corporation.
All right.
For this reason, I'm recommending that the flaws in this document be revised and at very least not repeated in future trusts set up by the Treasury. I am concerned about the temptation that we may someday see TARP banks and other financial companies encouraged to subsidize lending, for instance, in battleground states. This is why requiring the trustees to manage the trust in the best interest of the Treasury and not the U.S. taxpayer is so very dangerous. A second provision in the trust that I find troubling is the corporate opportunity provision located in Section 3.05b. Typically, fiduciaries are prohibited from stealing investment opportunities that they learn about through their performance as a fiduciary or trustee and using those opportunities for themselves. The AIG Trust permits the AIG trustees to potentially secretly invest personally in investment opportunities they learn about through their performance as trustees without the necessity to even inform or seek permission from AIG or the Treasury or the Federal Reserve. This strikes me as unnecessary and particularly dangerous given the potential for the AIG Trust to serve as a model for other similar documents. A third threat to the American taxpayer located in this trust document are the indemnity and immunity provisions of Sections 3.03a and 3.03d. These stand out as the most generous liability protections I have ever seen offered to managers of wealth and represent significant deviations from standard and best practice in corporate governance. Under no circumstances are public companies permitted to indemnify directors for bad faith actions or actions not in the best interest of their beneficiaries. The AIG Trust has no such limitation on trustee indemnification. I am aware of no ERISA or mutual fund trustee or director of a public company granted such a generous immunity from liability to their beneficiaries as the AIG trustees are in fact afforded. And I can see no good reason why those best practices should not apply here. In short, a trust in which the trustees cannot be held accountable by their beneficiaries isn't much of a trust at all.
These questions on behalf of my constituents in Ohio, who are policemen, firemen, teachers, and other public employees in Ohio, who AIG defrauded their pension funds. These are people who protect our neighborhoods, teach our children, dedicate themselves to public service, and AIG cheated them out of $96 million. Now, AIG has admitted on multiple occasions through guilty pleas and restatements of 24 transactions that the company defrauded investors and lied to regulators. My question to Mr. Liddy: does your business plan include settlement of lawsuits against AIG for bid rigging, accounting fraud, and market manipulation of AIG stock prices? We know that you paid $800 million settlement to the SEC and $375 million to the New York Attorney General. And if it does include it, why, after receiving $85 billion on September 16, 2008, and after you assuming the duties of CEO of AIG on September 18, 2008, why is it that AIG has cut off communications with representatives of a class action, which includes police, fire, teachers, and other public employees in Ohio whose pension funds AIG defrauded? And how can you tell this committee that those 8 months which have passed, which are contemporaneous with you becoming CEO, that you did not direct AIG to basically stall and continue the defrauding of these public employees in Ohio? Mr. Liddy.
Congressman, I'm sorry, I just am not familiar with all the particulars of the particular suit that you have just referenced.
Let me help you. On March the 26th, you sat in front of a Financial Services Committee, and this issue was asked. I want the members of this committee to follow this now. You were asked about this before. You told the committee you'll look into it. Do everything you can to make sure it gets resolved. Now, you said you would do everything on March 26th. This is after people had already been waiting for months to hear whether their pensions were going to be secure. Can you name one thing, just name one thing that you've done to get this matter resolved with respect to the defrauding of policemen, firemen, teachers, and public employees in the state of Ohio defrauding their pension fund? Can you name one thing that you, as the CEO, have done about this?
Anything involving legal settlements or legal challenges, I depend upon our very substantial legal department to resolve. I believe that they have been in either negotiation or contacts. I don't know. We will meet with you. I will personally meet with you to make sure that we advance the situation.
That's fine. I want the committee to be aware of this. AIG repaid counterparties 1-to-1. Counterparties in England, in Germany, in France. Dollar for dollar, you repaid them. But when it comes to police and fire and teachers in Ohio, zero for the dollars they invested. This is during your watch. You can't say this is about some other CEO. This is not acceptable, Mr. Liddy. You cannot get $182 billion, as my friend Mr. Cummings pointed out, and then say, well, we want to be spared criticism. Yes, this is criticism. AIG cheated police, fire, teachers, and public employees in Ohio out of $96 million. That may not seem like a lot of money to a firm that's used to dealing in trillions. But you cheated people who save lives, who teach our children, and I want to know right now what you're going to do about it. What are you going to do about this?
As I said, we will meet. I'll meet with you right after this meeting if you'd like, and we can begin to understand exactly where we are. I just don't have the information on it. All of the things that you've mentioned, I'm very sensitive to them. They did all occur before my watch, but I'm prepared to take responsibility to decide whether they should be resolved, and if so, how.
Well, you know, we know that two other parties have already been settled in the class action case, Price Waterhouse and General Reinsurance Corp. Do you just feel that when it comes to public employees, you can roll them? You can just dismiss them? Is this your attitude? You haven't resolved this, Mr. Liddy, on your watch.
We will work with you and do everything we can to get it resolved,
Mr.
sir.
Liddy, I'm the chairman of the subcommittee on domestic policy. And until this matter is resolved, you are going to keep getting called in front of Congress to explain why it's okay for AIG to cheat police, firemen, teachers, and public employees. I'm not going to let you go, Mr. Liddy. And I'll talk to you after the meeting, but you're not going to roll this member. Guaranteed.
Yes, I'm not. We'll get together after the meeting. We'll do everything we can to make sure that we resolve it.
You said that on March 26th. I have your quote. Not good, Mr. Liddy. God bless you. Thanks for being here. But there's a moment here of truth, and you are going to have to remember these police, fire, and teachers. Mr. Chairman, I came to this Congress not to represent these people on Wall Street who have been shafting the American people. I came here to represent my constituents, and that's who I'm speaking on behalf of right now. Not going to let you go. Not going to let you get away with it.